Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show, our weekend fun frivolity. Just want to make sure YouTube is kicking in here. The RationalInvestor.com's Broiler Chicken. Oh, and I see we have a whopping. Mind you, I never know how these public announcements of these YouTube video goes, but. I do notice that after I talk for about a half hour or so, that's when people start piling in. So we'll see how it goes. Joshua is one of the people on the YouTube page on his cell phone, so that's good. Yeah. Well, actually, and I think she's on the call, right? We're all supposed to collectively ring Colleen's bell. So, but I did see earlier, I think I saw, you finally picked up on that? I've been saying that for a few weeks now. She's like, what? What the hell is this? Man, it's been a really weird Christmas, I'll tell you that much. Liam and I, have been sort of getting settled in our new environment over the fall, and so this was a first Christmas for us in our new environment, and it was a bit of a challenge, and I could totally tell that unfortunately with autism, Liam is a vacuum cleaner for colds. He's almost always sick with a cold, but I picked it up, and my holiday was spent running around from, and actually one of the Daily Brief videos, I actually tried to do it and had to excuse myself to the bathroom halfway through the Daily Brief. So, but man, I woke up with just a splitting headache today, and literally first thing I did on waking up this morning was have a nice healthy barf. So I'm not feeling too good right now. I've been sort of... No, I was going the other direction now, Joshua. So I don't know if I'm going to really be able to do too much of value for you here today, guys, but I do know that people really appreciate consistency and reliability and dependability and those kind of things. So I'm here. And, of course, I've been checking out a few price charts this morning. And it's encouraging to see that just on a, we try to keep these weekend shows sort of, I like to talk stock market Monday to Friday kind of idea, because the stock market's not open right now, so there's not really much for us to look at. So these weekend shows, we kind of like to do it as a crypto base. But also too, unfortunately, I suppose it's a good time to get sick. The school is out right at the moment, so everybody's out on Christmas break. So I would sometimes spend these broiler chicken weekend shows sort of answering questions current students may have. And I have noticed that there have been a few people who have been asking for school sign-up links and stuff like that. So by all means, if you are interested and you'd like to join the program, leave a comment. I think Julian's done a great job sort of responding to the Google messages and Facebook posts and stuff like that. So thank you so much, Julian. But ironically enough, I think the market's actually setting itself up for a half-decent little sort of seasonal rally. Buy when it snows, sell when it goes. Very cliche. And we've got a bunch of fundamental drivers ahead of us here in crypto in particular, as well as sort of seasonal bottoms there. Seeing a lot of that. So get ready. Through the winter of last year, that was the perfect time to get ready. Set yourself up for participating into the spring and summer frivolity in crypto. And literally by the end of the summer, the rally was done, and we all go into hibernation mode, wait for prices to melt back down, and do it all again. And the irony of it all is that this is exactly what the professionals do in the stock market, year in, year out. The Wyckovian markup process, you could call it. I think Bitcoin went through an absolutely textbook Wyckovian markup process there. And then through the seasonal trough, and then ultimately ending with tax loss selling, buy when it snows, all that kind of talk. Gee whiz, here comes bottoms in the market. What a surprise. So I do appreciate that there's a bunch of sort of underlying fundamental reasons for us to be thinking about turns in things like Bitcoin. As well, I've been sort of musing recently about potential changes in things like Ethereum. What was it called? The Istanbul update or something like that? Well, Istanbul or Constantinople or something like that. But we've actually, and I was tweeting out quite a bit with the public, and people were interacting with me on Twitter. It actually kind of looks like Ethereum is trying to turn here. Where are those three main charts I like to get? Yeah, what the hell do they call this thing? Istanbul! Istanbul was Constantinople. Yeah. So, not only do we have sort of seasonal justification for us to be interested in the long side, I think you can make the argument, of course, with Bitcoin halving coming up. That's going to sort of light a bit of a fire underneath the market. I do think a lot of sort of technical levels are starting to come in. And I found it fascinating, before we really get going in earnest, how, in recent videos, I, especially for like the public, I love doing this for the public, I just started to draw what ifs. And I've seen repeatedly over my career markets love to lose 78.6, come back up, bottom, and then ultimately down the road you see that, gee whiz, the W came in off 78.6. I find it fascinating that Litecoin sort of led the way down, hit this really powerful AB equals CD level. And it's encouraging. We've got a nice little up candle here, maybe the start of a fractal. But, like I said, considering seasonality, considering, fundamental drivers and things like Ethereum space, and interesting that ETC is actually trying to reunite with Ethereum in a weird sort of way, which I think has created a bit of an opportunity in the ETC market for those people that are interested in Mr. Silbert. We haven't really heard too much out of him lately, have we? Hey, hello, Edward, is that how I pronounce your name? Sorry, Edward. And hello, Dennis. Nice to see you guys over there on YouTube. And at what point do I have to wait for a good 50, 60 people to be in the call before I ask you to hit the like button and subscribe and ring Colleen's bell? I love saying that. If you find offense with that, Khalid, just tell me and I won't say that anymore. It's just so adorable. And then also, I think I saw Teresa was on the call earlier, and I have to give a big shout out. I don't know whether Teresa, you went over to YouTube page there or not. She was here. Oh, cool. Awesome. But got to give a shout out to our crew down in LA, and I suppose everybody's like, now he's going off on a tangent when he's going to talk about fucking price charts. But before we get back to that, I have to give a huge shout out to the Riviera brothers out of where do you guys live? Ventura? Is that where it is? I think it is. I think it's Ventura. Yeah. And that's sort of like the north side. Would you say north side of LA? I don't know whether you'd say that or not. Anyway. And interestingly enough, we also have Joshua. Joshua, would we say you're from the east side? I mean, really east side. He's so east. Are you east of Arrowhead? I think Joshua is actually in the mountains of LA, if I'm not mistaken. So if you think about it, LA has mountains. East Laguna Beach? Oh, okay. Well, that's not that far. I used to live in Costa Mesa, actually. That's pretty close. Um, so anyway, our we had one student who was actually having a really difficult time. She was in the South Bay, and I just put it out on the site. Oh, that's cool. I just put it on the site. Can anybody help? And two people in LA, two TRIers in LA, were like, yeah, sure, we'll get together with her. And she wrote the final exam, and congratulations, Teresa. I heard that you got, I think it was like 98% on your exam. So way to go! Yay! And I mean, that's what this is all about, right? I mean, seriously, it's actually interesting because we're working on a webinar for the site. I think it's long overdue. So we're working with this one gentleman. And he's been like, we have to really sort of articulate your message, right? And I've been giving it a lot of thought. What is it we actually do here? What? And it's all that, we want to make a positive difference in this world. People that have learned these concepts, they see it, they get it. And what's so cool is once you're empowered with this information, it's very liberating. And I see that people that get this, they're in a weird sort of way, they almost get to the point where they're like, yeah, I'd be more than happy to share it. I mean, it's we just got to get that information out there in the world. And actually, some people were even sending me some, hey, do you see this guy? He's calling himself the everyday investor. I don't know. There was some other guy, the cool dude investor, on. The modern investors, that the what it was on YouTube and stuff, and I really, I don't really care. This everybody should know, and the whole, where am I going with all this? Why am I wasting your time? Sorry, guys, and put me on 2 times speed. It actually makes it a lot faster for these videos to get through. But in a weird sort of way, guys, everybody watching this information isn't mine. It isn't like I have a copyright on how to run a small business of trading. It's not like I own the patent on what a divergence is. It's just that I do believe that we at TRI, we have a very systematic approach to teaching all of this, putting it together in a usable construct so that you ultimately, I mean, what's the goal of all of this? The goal of all this is trying to reduce the anxiety and trying to reduce the stress of all this, and just play from a level playing field, and just be able to survive in crypto after the past couple years of this shit, right? I mean, that's the whole purpose of the course and everything that we teach. So please don't, I totally appreciate that people are sort of watching my back and going, is this guy doing that and that? I don't really care. If anything, if somebody wants to blatantly copy me, what do they say? What do they say? Something like, how does it go? Mimicking is something like the best compliment or something like that. I mean, if you want to copy what I do, fine, I don't care. I mean, remember, I've learned all of this stuff that I teach you guys. I learned it from somebody else, right, down the road. So I don't really have a problem. What I guess the problem that I have, and unfortunately, I've been doing a lot of sort of self-contemplation about where this site and what my purpose is here. I don't know. Is it because I'm too opinionated? Maybe, you guys give me some feedback here, even on the Google page. What is it that like you see these Schiller guys that have like hundreds of thousands of viewers, and their views get like 50,000 views, and I watch the video and I go, well, I didn't really learn anything through any of that. I heard a lot of rhetoric. I heard a lot of, I think this is going to happen. I think that's going to happen. Well, one of the things that I really like to do is I like to try and teach you guys through these videos, and at least, at the end of it, you go, wow, I never knew that before. Well, cool, something new to write down. So I like the message that I've conveyed here over the past few years, and I think the message is fairly consistent. All about trying to do best practices and trying to learn the process. But I sure would like to be able to try and get this message out further and deeper and to more people. And I don't give a shit about the money. Maybe that's what I have to do, is I have to write right across the YouTube page. I don't give a shit about the money, YouTube. You can milk me as hard as you want. I just want to get this message out somehow. W's! They work! Yeah, well, and best practices, right? Just be a demonstrator of good things in the market, I guess. Okay, so like I said, I'm a little bit delirious right now. It's a really odd Christmas break for me. I'm a little bit under the weather, so my apologies if this video is kind of like, wow, this guy's heading off on a weird direction again. But let's get to the price action, and hopefully you guys feel like you're being well served here. So, we always like to sort of start with, what's the sort of fundamental view of Bitcoin right now. And I think I even added it to, like I said, I want to keep this primarily crypto. I even added Shane's cost of production script to the library, so everybody should be able to get this. So there's sort of two sides to this story. If Bitcoin's really popular and it's mass adoption and there's a finite supply, blah blah blah. Then we and what does sort of mass adoption look like? Then I think we want to and I always do this to you guys. Sorry, here, let's put these charts side by side. We want to think of sort of stock to flow, and if I understand correctly, there's one gentleman who seems to be getting all the accolades on crypto and stuff recently. What the hell was his name again? I was reading about it earlier. Fudge. No, not that guy. The other one. Not that guy, but the other guy. Anyway, and I can never find these damn things when I want to find them. This guy here. This guy seems to be really popular. There's Plan B. I think this is that stock to flow analysis. It's interesting how he's using reference to 200-week moving average. Have you guys ever heard me make reference to that 200-week moving average before? Hint, hint, hint. If I ask that question, the answer is probably yes. So is there? So it's good that there are other people that are watching that kind of information as well. I'm not quite sure. That's a good question. Somebody asked, is that Bloomberg mean idea? And do you remember that interview by that guy? That was back in like 2016, eh? Wasn't that a cool interview by that Bloomberg guy? Do you have that handy? Because I remember that would be really good. Because I think a lot of people totally forgot about that study. But if you want to kind of know what the institutional people are thinking, that's a good study. The Bloomberg, the average price of Bitcoin. But anyway, point of the matter here is that I get the impression that this is sort of, like we said, that stock to flow kind of conversation. And I think also, to a certain degree, that's this, Phil B. And I probably ought to, at least get the guy's name right? It's so irritating how unprofessional I am. I even listen to myself. But this guy, now what the heck is your name, Phil B? Phil B? Has he actually got a name? Phil B. Well, I guess that's what I get to call you, dude. Sorry. If I actually know who your name is, I'll actually say it. But anyway, this gentleman's study, and I get the impression that he's actually extremely popular on Twitter. So do yourself a favor. I would follow this guy. He's pretty knowledgeable guy. But he was sort of the first one, and I don't know. I've seen this a number of times, but he was sort of the first one that did this sort of eyeballing logarithmic growth scales and sort of what does consolidation, first off, if this is natural growth rate kind of idea, finite supply, blah, 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 then what is that sort of minimum growth rate curve look like? And then if you can do one of these studies, and keep this really simple, people. I mean, seriously, you should all be able to just replicate that study. It's not too difficult, right? It's just simply playing connect the dots, right? You got to use this curve tool here on TradingView, and you just map it out. And then all I did was just replicate this yellow curve here, and then just replicate it here, and just sort of played connect the dots. And that's about the best I could do with this. If there is some sort of mathematical formula to this, I'd love that. Phil B. But nonetheless, a simple message, and sometimes in technical analysis, just keep it simple, stupid, right? Let's not overthink this. The huge selling feature of Bitcoin is the fact that it has a limited supply. So if more and more people want, more and more hodlers, more and more Lightning Network nodes where they need Bitcoins, blah, 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 more and more people consider it a store of value and start buying Bitcoins and hoarding them, well, this natural growth logarithmic curve idea, I think, is apt. And what I really like about this study is I do believe that to actually get these kind of blow-off tops, you actually need periods where the market actually goes back and forth here. We teach point and figure charting in our level 2 program. And we have this concept in point and figure charting called the horizontal count. And it's really cool when you go through Bitcoin and you do a point and figure chart and you count up all the boxes. And then on the release, and that's a breakout to new highs for point and figure people, you simply express the amount of energy that's been built up in this consolidation through the boxes, express it on the breakout, and it almost perfectly calls the tops of the markets. So that's a charting technique that was used over 100 years ago when floor traders wanted to keep track of a lot of stocks, but obviously didn't have computers to track price action. So, I mean, we could do a point and figure chart here. I won't, but long and short of it here is hopefully you see consolidation leads to ultimate face rip higher. Consolidation ultimately leads to face rip higher. And really, I mean, this is the irony of investing. Is really all you really want to try and do in this game is just somehow prevent yourself from coming in on the buy side up here. But of course, when is the public interested? The public is usually only interested when they open up their newspaper and they see Bitcoin's up $5,000 a Bitcoin. It's going to the moon. Ain't gonna get it. Right? And of course, that's a trap. So just do yourself a favor and just, that's why I kind of like these kind of studies is, the interesting thing, I think you can make the argument, is that we are in one of these consolidation zones. So, the smart money, and you hear them all yammering away on Twitter and Reddit and stuff like that. I think the smart money is back on the accumulation side here. I don't know, and a big shout out to the crypto community and the YouTube watchers and even people on the site. There was another gentleman, and I should really get his name correct too. Problem is, it was a while ago that I put this out. Does anybody have his link real handy? The guy who did the logarithmic study. I thought that was very wise, but the problem is, I think I tweeted it out a while ago, so I can't remember the guy's name just off the top of my head. But it was a really good video. And very down-to-earth gentleman, very scientific, which leads me to believe that there's probably some validity to his thinking. The only problem is I can't find it. Does anybody know what I'm talking about? It's the guy who did the write-off of the lows. This logarithmic. Does anybody have that link handy? If you do, just save everybody some time here. I got it in here somewhere, but it might take me a while to find it. Benjamin Cohen. Thank you, Peter. Benjamin Cohen. And I did see Teresa. I think you. No, it wasn't Teresa. It was Colleen. You asked earlier. I was just going through this. You asked a question about level 3 or something earlier. Man, I guess that was a while ago. Maybe I was hallucinating. Oh well. Sorry, everyone. Totally off on a tangent there. Okay, so when oh yeah, Dr. Evil. That now this is an interesting commentary. Benjamin Cohen, thank you. All right, so Roman got it there on YouTube, and I think it was Joshua here mentioned in the lounge. We'll talk about him in a bit, but it's interesting how Dr. Evil now is actually calling tops on Bitcoin, and ironically enough, I think that's probably our sign that, okay, well, as soon as people start saying price will never go to this level, it will never go to this level, it's over. And I'm starting to see like upside price objectives by all these talking heads coming down, 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 down. So now, ironically enough, is actually the time when we should start thinking, okay, I'm starting to hear the bearish sentiment come in. Sounds like it's time to start accumulating again. This gentleman, here he is. No, is that him? Charles Edwards? I thought you guys actually had that. Benjamin Cohn, is that this guy? Anyway, maybe this guy retweeted the other guy. Oh well. All right. Well, anyway, so there are some people that are putting these kind of logarithmic growth curves out, so that's good to see. But I thought I had that one gentleman. Oh well, now I'm just wasting your time. Sorry, everyone. But anyway, yeah, Benjamin Cohen. So maybe take a look at that. Oh, here it is. Yay! Why does that always happen? That always happens just about the exact moment that I figure I give up. I'm just about to give up. So I kind of like this kind of thinking as well. And this is there he is. Way to go. Yep, Benjamin Cohen. You guys nailed it. Way to go. I really do like this gentleman's thinking. So, you know, I mean, I'll be completely blunt with all of you guys, and you know this. I'm a trader dude, right? I spend a lot of time. I know every single different part of the stock market, futures markets, commodities markets, you name it, I know it. But I'm not going to bill myself as a sort of cryptology and, you know, blockchain, cryptocurrency, ledger, mathematics expert. I'll never do that. I would strongly suggest we, you know, defer to these kind of people. The simple message is, you know, I mean, what I find really interesting is when we start coming down into these sort of, you know, mathematics, logarithmic growth, and then we start actually seeing things like crazy concepts, like technical concepts like reload zones, mountain man levels, and then maybe W's and divergences and all that. That's the kind of stuff, of course, I get all super excited about. And I've said this repeatedly. Actually, I do like to rely on the community for good fundamental stories. What are the fundamental drivers? And then I go look at price action and charts, and I say, okay, well, you know what? I can see what's going on here. I'll step up, or nope, won't touch that with a 10-foot pole. So I do like the idea that we are coming into halvening events, which historically has been very put a bottom in. I don't think it's necessarily the beginning of new bull markets. And actually, one chart set up that I probably should have had ready to go for you guys was I've done sort of like an 8-panel review of every single year in Bitcoin going back 8 years. And what did Bitcoin price action look like through the last halvening event? I think generally speaking, the bearish play, this thing's overvalued play. This thing is still correcting from its previous blow off top play. That's all playing itself out now. And the interesting thing is a fundamental story will only go on for so long, and then after a while, people will, in essence, anybody who was going to sell has sold. And anybody, on the bullish side, anybody who was going to buy has bought. And you can make the argument that that's actually what marks market tops and bottoms. When everybody is long and everybody is bullish, there are no more buyers. So if that's the case, then which direction price going to go? Down. And conversely, and this is kind of like what I'm talking about earlier when I said, I heard Novogratz has tempered his enthusiasm. And who is the other guy? Dr. Evil has said that that there's no way Bitcoin will hit $1 million. And like I said, I mean, maybe he's right, maybe he's wrong, who knows? But when people start coming out and saying, your hopes are over, your dreams are over, you've missed the boat, it's over. Usually, actually, the irony of it all is we're actually pretty close to a bottom at that point. Me personally, and kind of like what I showed you on things like Litecoin, if somebody said, "But Brian, you get your magic wish. What would you wish for?" I would love for all of this to have happened down here, where we get our W and it comes in off 78.6s. That would be ideal. But the problem is that the market never really cooperates, never moves in a straight line. So we'll see how it goes. There's no guarantees that this would happen, but if this was an ideal scenario for a guy like me, this is what I'd like to see happen. And the interesting thing, like I said there a moment ago, is if we look at something like Litecoin there, where the hell it is. Where did I put it? Over here. We now have worked our way down. See, what I'm worried about is, you see how 61.8, are we going to bottom? And then, bam! Right? And this is what I'm worried about, getting too excited about bottoms off of 61.8. I've seen this so many times. And if anything, like I said there a moment ago, what I love to see is a nice, beautiful W to come in right here, recapture that 78.6, and then rock and roll. So, we definitely don't have that kind of scenario working right now. So, stock to flow, Bitcoin's limited supply, halving events coming up, what's the natural growth rate with mass adoption, these Philby's lines. I can understand why. This is such a popular study, and there's so many people on the net that are following these studies. That logarithmic chart, like I showed you from this gentleman, and I think he had it right. Was it? Where was it? Now I can't find it. Anyway, he's got his logarithmic. Yeah, there we go. Something along those kind of lines. Have we traded back down to this logarithmic line here yet? I don't know. That's a tough one, right? And that's looking at these charts, and I don't know whether I've drawn this correctly. This might be incorrect. I might have done these numbers wrong. I've just tried to replicate that as best as I can. So I suppose, fundamentalists, those logarithmic curve people, they might say, well, we could actually have come down a bit more down into 5,000, 6,000 area. But I definitely do like the idea that we're getting awfully close to some sort of, supply and demand sort of pivot point. And then what I do like is, and this is the way I would actually approach commodities trading, and I do believe Bitcoin has basically turned into a commodity. All the altcoins and their relative supply issues and what is actual unit value of these various altcoins, I think the jury is still very, very much out on that. But the basic premise of proof of work, I think that's one of the reasons why this idea works so well, no pun intended, is that you can actually justify work being put in and energy being expended to validate the network, and there is a net value of that work. And that sort of speaks to Shane's study here, where, and this is what I've found in my 30-year history of trading the markets, is the best time to buy commodities is when they are trading at or below the cost of production. Of course, because of Moore's Law, you could make the argument that that cost of production model for Bitcoin would have a diminishing return, I suppose. I don't know whether that's the right word. Yield, maybe. Because processor speeds double, I think, once every 18 months. You could make the argument because of Moore's Law, that's one reason why Satoshi built in this concept called the halvening. I don't know about that, but what I do know is, we saw it in Litecoin last year. I've seen it in years gone by, that what ends up happening is, everything about 2017, 2018 was all about CME. And there were lots of tells through that conversation, fundamentally, that things had just got a little ridiculous. This is a great study, and I don't hear anybody talking about this online anymore. But this was a great study, even through the May-June peak here just this year, that suggested that, the actual value, network transactions, it was getting overloaded. And it needed some time to clean up. And interestingly enough, this script in particular actually highlights times and events when the network is actually oversold or underutilized. So I don't think we're overbought, but at the same time too, I don't think we're oversold. Maybe this aligns more with maybe like this kind of conversation. And this gentleman's study down here suggesting that really actually the bottom's a little bit further. I don't even know if I've drawn this study correctly. I might even be wrong, so please bear with me. But just hopefully you get the idea. As I said, as a commodities guy, and remember, I used to be a commodities broker, a commodities trader. I used to be a prop commodities trader. I've done a lot of commodities business in my day. So really, I might make the argument that if you can just somehow identify cost of production windows and what's sort of the most, number one, what's the hottest graphics card, ASICs card, whatever, that's being used, and then that gives you sort of an idea of where miners' break-even levels are. And of course, we know that the halvening event is actually going to make some of these equipment actually unprofitable. And we're probably actually going to see a lot of sort of like this S9 kind of technology evaporate. People that are sort of front running the market, getting the equipment as fast as possible, they still enjoy quite a healthy profit margin. But the interesting thing is, at 3,000 and change after the halvening event, that's going to jump up to 6,000, 7,000. Whoa, what a surprise. So, on balance, and what I wouldn't surprise me is that, maybe we get some sort of psychological FU. Because keep in mind, Bitcoin cannot, and I've seen this repeatedly for 5 years now, Bitcoin cannot end either an up move or a down move without some sort of horrendous blow off top or bottom. I've seen it for 5 years. So my hunch here is that fundamentally, especially once we're on the other side of the halvening event, this is going to be value. If you can, I would strongly suggest you be working stinky bids. And on that FU, remember, Bitcoin can't finish a move without some sort of horrendous FU move. Every single time. It always happens that way. Kind of like this. This is just this year, right? This is what you need to see to mark the end. And my hunch is that they're actually going to sucker everybody into thinking bull. And then one more dump. Fuck you. Sorry, YouTube. Had to say it. And boom, we zip right back up into that value proposition, and then start working our way back up. That would be typical of Bitcoin. So, get your stink bids working. If you can throw in a bid at 2-3 grand for some, I would strongly suggest you do so. Now, I'm not telling you what to do. I'm not giving you even recommendations. If you want to take this video and take it to your financial advisor and hit play, and then once I'm done my rant, turn it off and ask the financial advisor what they would suggest, I think that would be a great idea. I would find it very difficult that they would argue with me that you're coming into a top of the market, because of things like we are at or below reload zones. And the irony of it all here, and I even see like crypto Twitter and stuff like these, all these OG guys are saying, yeah, I got my stink bids down here at like 5,000-6,000. I'm just waiting for that final FU. Take it for whatever it's worth. But that's generally what I'm sort of thinking here right now. And, like I said, if you can ever buy a commodity at or below the cost of production, awesome. What I would also suggest you do is keep a real close eye. Now we actually have publicly traded companies. So take a close look and build like a database of all these publicly traded companies. And they have to publicly state exactly what their cost of production was. In one company I was looking at recently, they said their cost of production was $3,500. So, all right, take it easy, Joshua. Nice chatting with you. And I see a lot of sort of people in that sort of $3,600 area. That doesn't surprise me. It'll be interesting to see what their cost of production is after the halving event. But if you can pick up crypto at or below cost of production, I would strongly suggest you do so. And then what I would also add to that is you want to know when the actual tell that the bottom is in. Well, I won't say in. Usually the bottom is in when we see things like weekly W's. That's technical. But fundamental, from my 5 years working in this business, I can absolutely tell you without a shadow of a doubt, the bottom will be in when people start publicly talking about 51% attack. So I still haven't heard anybody talking about that. So my hunch is the bottom is not in yet. But we'll see how it goes. So hopefully, just right there, hopefully I've given you a bunch of tools, whether it be things like that stock to flow kind of thinking, which is this kind of thinking, whether it be cost of production, right, which is, and more cost of stock to flow, kind of logarithmic growth rate. Did I just put it away? Oh, damn it. Anyway, I just gave you that cost of production kind of thinking. And actually, this is one main reason why I don't think that this is done. This is the CME's weekly Bitcoin chart. And I don't mean to be rude, guys, but if you ever see a weekly futures chart with gaps the size of this, I put a tweet out here, gee whiz, you could drive a truck through this goddamn gap. And all you candlestick aficionados, you need to understand that according to candlestick people, these tails coming into this gap, that is not filled in. They consider this gap filled in with candle bodies coming in. So this gap here is officially filled with the candle body coming in here. This gap right here is filled when the candle body comes in and fills the gap, right? And then we can go back over time. You should be able to see this is just the CME chart. But here, right? So this gap right here was not filled in until, really, you could argue this event way over here. So, it's interesting. This gap up top here, technically, it has not been filled in yet, which means that, interestingly enough, Bitcoin on a weekly price chart is actually telling you, on this price chart, it is actually telling you, I will be back up here at some point. Isn't that kind of cool? And you can see stabs into that gap level and then rejections away. This gap still technically has not been filled in yet. So, just the message I wanted to convey to you looking at this chart is, holy crap, that's ridiculous. I mean, like, literally, this is almost very schizophrenic here. It almost, in fact, probably if you did a log scale, yeah, it'd almost be exactly the same size. Well, not quite, eh? It's a little bit lower. But there's still a lot of business that has to be done here. And this would be that, okay, let's get the kids all super excited. Let's ramp up, see if we can get up through these highs, right? And then, bam! And just face slap you. Bitch slap, face slap, Colleen slap, I don't know. It just bang. So just be leery, be cognizant of that, okay, guys? Maybe this is how that ultimate this yellow line is traded to down here on this Benjamin's script. I don't know. It's a tough one. Okay, so we talked a little fundamentals, right? So, and I like the idea of using analysis. You could build this stock to flow. You could build this network value study to help you just avoid buying into overbought markets. Whether you want to use it to help you buy oversold markets, it's up to you. I think that was a great indicator to avoid buying into overbought markets. There was a really, really cool tool that this gentleman built, and he talked about halfway through, where he actually studied the distance between the moves. The blow off top, how many standard deviations was that away, and then a return to the mean. What does that kind of look like? I love these kind of studies for analysis and analyzing fundamental analysis as well. So like I said, do yourself a favor and watch this guy's video. I think he did a fantastic job. Okay, so, that's sort of overview of fundamentals. Technically speaking, not a heck of a lot's changed here. And I know, this is where a lot of people run into trouble that are technicians and that are hired by CNBC media outlets where, every single week, once a week, twice a week or whatever, they're expected to, have an article, a column, whatever, a segment. And of course, what are you supposed to say if nothing's changed from the previous week? Okay, my report this week is nothing's changed. Have a good night, Jennifer. Goodbye, all. You don't sell laundry detergent with that kind of message, I can tell you that absolutely without a shadow of a doubt. And remember, most of the people, and this is at the beginning of this video today, I even said today, I said, why is it that I don't have any followers and no viewers? I mean, a lot of the time when I see stuff, I'll just go, well, there's just not a hell of a lot to do. And that, unfortunately, does not sell newsletters. So, we can look back in time and we can see, I really want all of you guys to try and learn this. Down, up, down, test those lows, turn around, head back up. There can be little trades, down, head up, came back down, but in this case it just wasn't ready and it actually M'd out, and see you later. So you don't know whether these W's are going to translate into absolute insane face rip moves or whether they're just going to be little, counter trend rallies. I think on balance, I'm actually quite comfortable. Big green boxes. You guys have heard me say this a million times before. As long as we're in these big higher time frame green boxes, I really don't have a problem with people accumulating, right? And our dollar cost averagers, they're all kicking butt. And just slowly accumulating away. There's nothing wrong with that whatsoever. The key here, though, is you just don't want to bite off too much of any one asset. I know there are some people that will just bet the farm. and they'll just say, sometimes in life you just got to go for it. And that's great. Often you hear from the winners those stories, but you never hear from the losers of those stories. Right? They went for it, it didn't work, and they're still poor. So, I've been at this game for 30 years. You guys, people that follow the videos on a regular basis, you can, day in, day out, Monday to Friday, I love the market. I'm here to play the market. I'm here to have fun with the market. I'm never going to put myself into a position where I'm going to bet the farm on any asset. And it's, and that one asset's performance dictates my fate. It's just not worth it. I've seen too many times in the past where that just doesn't work. So congratulations to all those. I'll even congratulate you ahead of time. If you bet the farm on something and the idea works and you went 10x, 100x, and you made a shitload of money, way to go. I don't know whether I could really subscribe to that. And that's the financial planner in me talking. And I just have a simple rule, right? Try not to risk more than 5% of whatever money you got to work with on any one particular sort of trading plan. Just try not to risk more than 5% of that money on any one idea. Now, you can always leverage your way into that trade. Take 5% of your stake and go buy a whole shitload of call options. And if the trade works, rock on. You could be driving Lambos. But it's just my general feeling that it gets really dangerous when you start. And also, too, your mental health. Do you want to keep the hair on your head? Do you want to go gray? Do you want to go white? Do you want to keep your family? Do you want to keep your wife happy? Just try and play from a position of strength. And that whole don't put more than 5% of your money into any one play is that playing from a position of strength. So you want to start loading up on Bitcoin? I don't really have any outright buy signals here, but I have no problem whatsoever. And last year was a perfect example where if you had just started, this happens to be a clothesline, but if you had just started and said, look, I'm going to start nanny nibbling, maybe I'm going to go 1% every few months, and all right, I'm sitting down here, I'm all loaded up, my average cost is up in here. Now what do I do? And the answer is you don't do anything. Get your orders to sell halves on doubles working. And through this subsequent rally, of course, you got paid for all your effort buying down through here. Could we be doing the same sort of pattern here? It looks, I gotta say, frankly speaking, this looks shockingly similar. It's almost like this is almost like part of the algorithm to correct. It's like we have this big move, and now we're going to almost replicate this entire move on a smaller scale right in through here. So we are at green boxes, so that's encouraging. Can you start dollar cost averaging, nanny nibbling? I think so. It would be really cool to almost get a scale of this and go I don't know, let's go say from here to here, right? From beginning to end. And then, actually, you know what? No, and see, this is the problem is I don't know how to do this. Somebody, all you smart guys on the site, you should be able to figure this out. Do we have to go off of the original bottom? Do we go off the weekly breakout? But, what I want to sort of study is this scale. Can you see this move here? And then notice this move here. It's almost like it's like a 1/3 scale. I'm not quite sure. I don't know whether what I'm saying here makes sense or not, but it almost looks like this is, almost like a replication of this, just on a smaller scale. So if that's the case, then we should bump along 61.8s and give little head fakes. And then, like I said, one more FU. Everybody goes, that's it. Bitcoin story's over. The dream's over. And it turns out that is the bottom. And gee whiz, when we got down into this area just about this time last year, about a year ago, maybe a little bit more, maybe a little bit less, about a year, somewhere around there, we started hearing talks about 51% attacks. So put it all together. I don't think there's a huge hurry here. It's like And you know, this is why I really like using. I think I've done this. I'll just do this really quickly for you guys. It's so cool. You want to make and when I do these YouTube videos, I'm trying to speak more to that higher time frame participant. I know there's tons of traders out there that are like long, short, long, short, long, short. You know, be careful. But really, I do more of that in the lounge and on the site. But you know, if we just do the S&P 500 and we throw on 2 simple moving averages, an EMA, and simple moving average. And we're going to set the EMA to relatively quick. I personally like 13 periods, lucky 13. And we will set the slower moving average to 30 periods. Again, it's more personal preference, but I like how the 30 MA, and think about it, and we're going to look at the asset from a weekly perspective. And what you often find is that this moving average relationship picks up trends very well. So you can see market turned up here and it grabbed that trend. Then we turned down and you can see the market had to go sideways, turn back up, turn down, but then turn back up in earnest, and notice that that's basically about the same level that it turned down. Trend, turn down, turn back up, never did turn down, so we're sitting up, turned down, but interesting how it turned back up almost exactly the same level, turned up, and then of course here's 2007, and this is, I actually traded this. Damn lucky. This is back when I was a broker. And you'll notice that the moving average turned down here. I even was running a blog at that point. You guys remember those old, what was that? Anyway, I can find the blog post too. It was so cool. But in essence, a big sell signal here on the moving averages, and you say they stayed down through that whole meltdown, 2007, 2008 financial crisis, blah, blah, blah. And then they turned back up, and then turned down, turned up, almost the same level, turned down, turned up, actually a little bit lower. And then check this out. Turned up, and look at this, son of a gun stayed long the whole way up, all the way up to here. And then notice, turned down, all right, then turned back up here, a little bit lower. And then it caught the whole move all the way up. So it's such a cool little keep you honest, trend following system. It works pretty darn well. And it's slow, right? We're talking about weekly price charts. So with all that said, hopefully you guys can appreciate, we go back to this chart. And where is that? We'll go like that. Oh, there's so much stuff on here, isn't there? Why don't we go? You used to be able to just hide all the drawing objects. I don't know whether you can do that now anymore. I think it says remove. But oh well, let's see what happens. Boom, all gone. So you can see Bitcoin trend turned. I wanted to show you. Well, screw it. I'm just making a mess now. I thought I could undo that. Let's put that back. Sorry, guys. All right. So with that S&P chart I just talked about, not that one. Where did I put it? Right here? Nope. Okay, now Brian's going crazy. What did I do with the damn chart? Hide drawing tools. Yeah, I know. I thought I could hide the drawing tools. Anyway, I got it around here somewhere. There it is. Yay, I found it. Okay, so let's use that BLX, right? Brave New Coin Liquid Index. And the same logic here, guys. It's not rocket science. You know, I mean, every time it breaks out, and really we can go all the way back here, right? Big bull run, and pause. And interesting here, pause at that price there, and then notice turn back up right there, basically the same level. So while this is negative, just cool your jets. Turns back positive. Oh boy, look out. Boom. And look at that. It kept you long the whole damn way up. Look at that, eh? Ay, caramba. And then finally crossed. So, well, let's see where it crossed back bullish again. Oh boy, way down here, eh? So I don't know whether we had any head fakes there, but came all the way back down, crossed bullishly here, bearish, then back to bullish. So a couple head fakes, really, and of course, hopefully everybody sees the W's. And then watch this one. Ooh, look at that. Stayed long the whole damn way, all the way to there. Boom. So, when you see that, probably odds are you should probably just cool your jets. All right, market, holy Jesus, well, that was a good idea. All right, so market calms down. Then again, here comes our W's. There's that bullish cross. Now that's at 4,700. All right, and now we just recently crossed back bearish. So, here we are now. Is there any hurry here? What do you think, guys? This just recently crossed back bearish. Now, the interesting thing, right, is that this thing might cross back bullish, where price it was here. What was that? 8,500. That could very easily happen. But this is where I'm trying to impart to the public the idea that the trend is still down. And there's not a huge hurry here. So I hope that was a fun little exercise I went through. And of course, everybody, you can build that study yourself. Yeah, and unfortunately, we also have a nice little analogy. Are we supposed to be thinking anything if we ever see the market smiling at us? Uh-oh. And actually, I do remember this high was slightly higher than that high, so I was feeling a bit more optimistic that maybe we could push a little higher. But then you'll notice that right following, this M, we actually also have another M right there, right? So the market just, one smile, then another smile. Gee whiz, you start getting a lot of smiles, and be careful. And then this is what really sucks, because this is total Wyckoff 101, right? So this is, the mark up process. And unfortunately, this is now the mark down process. And I think you can actually measure sort of the strength of a bull or bear move by how well defined that market top is. That's very, very well defined. So probably lost a whole bunch more followers there just by saying that. And unfortunately, think Wyckoff at some point, believe it or not, actually, we should expect that level to be tested. Yeah, I know, but it doesn't sell newsletters, does it, Colleen? I gotta be going, man. Anyway. All right, so, that's sort of your overview of higher time frame Bitcoin image. Problem here, though, kind of like what we said earlier, is, I'm super uber excited about buying things like reload zones. And, just based off of this range, I don't really like what I see. Doesn't mean, it's just, it's just my opinion. Doesn't mean jack shit. But, there is Mountain Man way down there. And there is our line in the sand, and where I'd ideally like to see the bottom come in, way down there. So that's not encouraging. Keep in mind, this is a clothesline chart, so the levels are going to look slightly different. So, what I'm worried about right now is I kind of think that this right here looks very, very similar to like this kind of bottom here, where maybe we get a W and it ramps up. Notice how far away the weekly 13 EMA is, right? We ramp up. We might even like kiss. this 30 SMA from the underside, kind of like what you saw here and here and here. And really what we have to see is we have to see 13 EMA is actually starting to trend up with the 30 SMA coming down, and of course we get the big fat bullish cross. Right now we just got the 30 SMA to come down, so that component is in place. But notice how the 13 EMA right now is still sloping down. We really would like to see this 13 EMA sloping up, and really what does that mean? How do you get something like a 13 EMA to stop sloping down and start sloping up? And the answer is you got to have a long period of consolidation, right? Does this 13th week, is that 13 weeks there, right? So if we go date range, you can see by time we get to here, yeah. So by the time we get to here, if you actually count back 13 bars, well, actually that's right there. So it's just studying this price action now. And of course, if this is uppy here in the latter part, then that moving average will start ticking up and sloping up, which tells you that, you know, the trend over the medium term, or, you know, short, medium, 13 week, so medium term, has turned back up. So, you know, do we have that right now? No, we're not even close to that. I mean, this is still trending down, and we haven't even come back and tested the moving average yet. So, you know, I want to sit here and go, yeah, no, this is a bull. Buy this. You're guaranteed to make money. You're gonna just, but I just don't see it there yet. Can't push a chain, as they always like to say. So, you know, just based on a moving average perspective, I gotta cool my jets. Now, that doesn't mean it's all bad. One good thing that I see developing right now, which is leading to me to believe, again, I think we're getting closer to the bottom than the top. Thank heavens, it's taken forever to get here. If we start looking at things like momentum, keep in mind, this has been a pretty precipitous drop here, right? I mean, we topped back there at the basically the first day of summer. So all through summer, all through autumn, we're now actually into winter. We've pretty much been going one direction. So, you know, could we get nice little counter trend rallies here? Sure. Wouldn't surprise me. Trend's still down, right? But we've basically been going one direction now for basically 6 months. And of course, rubber band, you can't stretch that rubber band too far. You keep stretching too far, at some point it's going to want to snap back. And how do you see that rubber band? The answer is through things like momentum studies. You know, Willie is a modified Williams percentage R, which is basically a mean regression analysis tool. Think stochastics, think percentage R, that kind of idea. Relative strength index is actually probably even a better sort of rubber band tool, because in essence it just simply asks where is price currently relative to where it's been over the past 14 periods. So the point being that, you know, oscillators can only go so far, and then they have to start turning around going the other direction. It's just the laws of nature. Remember I had said earlier, if you actually think about the market, all it is a whole bunch of buyers and sellers all getting together, and some people are buying and some people are selling. But if you get every single person buying, of course, you know, price is going to move up. And if you do that over, say, like a 14-day period, and it just keeps going up day after day after day relative to those 14 periods, on just price alone, things like RSI indicators are going to be like, hey, we've gone one direction too far. But if you think about it in that very real term, the market is nothing more than just a bunch of buyers and sellers getting together. For the market to go up 14 days in a row and get things like RSI indexes up, you know, at overbought levels, It means that people just kept buying and buying and buying and buying, and nobody was selling, driving price down. And in essence, the market at some point just simply runs out of buyers. Everybody is long, and that's the scary thing. And please write this down. You want something to learn. Really simple expression. It just, it saves your ass so many times. Maybe let's see if anybody on YouTube, I'll give you a nice little window here to answer the question. But when they're yelling, you should be doing what? Yes, I know you guys in the Hangout, you get this right away, but the YouTube people, they've got a delay of a few seconds. And good that you got it, so that's good. Let's see if the YouTubers can get this. Janet Yellen, that's right. Just remember Janet Yellen. That's right. Does it make sense that, what do you think? Everybody, there's 56 people on the YouTube page right now. What? Buying? Oh, for God's sakes. Andrew, somebody slap that gentleman's wrist, please. What do you think about the crypto market in the fall of 2017? I hope a lot of you were in crypto through that. Were they yelling? Were people talking about Lambos? Was there popular, it's so sad. There was one girl out of California who fancied herself a trader after, I don't even think she even took, I think she took our education program, but like literally after like level 1, she's been doing it for 3 or 4 months. All of a sudden now she was an expert at crypto, and she was actually going to start, and I don't even know if she sold her course or not, but I saw she was advertising selling a course on how to get rich in crypto. And I was like, oh my God, this is ridiculous. So maybe go back and watch some YouTube videos. FFS? I don't know what that means. That scares me. I'm not quite sure what FFS stands for, ma'am. Anyway, so the point here is that everybody and their brothers, of course, was buying crypto and buying Bitcoin. And, of course, our site went absolutely crazy. And hundreds and hundreds of students in the program. And how the hell do you slow all this avalanche down? I mean, it was difficult. But anyway, what do you think? Are people in the public yelling about crypto right now? All right, it's a sign when the United Nations is actually talking about cryptocurrency. Now that has got to be a sign about the market yelling. And G20 meetings about cryptocurrency. Are any of the G20 people talking about cryptocurrencies anymore? I don't think so. They put that genie back in the box. So what's the exact opposite? And I won't give you the answer. Let's see if you guys over on YouTube can figure this out. What's the exact opposite in the market to yelling and all excited and, whoa, we're all going to get rich? And actually it's what Po Up A was doing. I would imagine a lot of crypto people that bought up at the top are doing this now. But if you see this in the marketplace, actually, ironically enough, from somebody who actually wants to make money from this, this is actually when you got to be in there buying. So just write this down. When they're yelling, you should be selling. And when they're crying, that's when you want to be buying. Believe it or not, you want to make money in this market, that's the way to do it. And actually, even just last year in Bitcoin was a perfect example. I mean, when we were down here, like I said, you want to add some fundamentals. You want to add in like that network value study. You want to add in Philby's value curves or Benjamin's logarithmic growth rate to try and hunt value. You want to hunt reload zones. you want to, what was the other thing I was talking about there? Actually, you know what? Also, too, really good tool that you can use as sort of a sentiment proxy is things like Google Trend Search. And right now, you know, so you only look to buy Bitcoin when that trending search is going absolutely haywire because price is collapsing. And right now, for whatever it's worth, Google searches are pretty quiet for Bitcoin. So that's another thing you can use. But what I wanted to point out, and if anything, I think it's a great example of this sort of, we're getting back down into areas where we can consider some sort of, you know, technically justifiable areas for us to get interested, reload zones, that kind of talk. Once we're at trade location, then our next job is to go down to things like momentum indicators, and that's why I was making reference to things like RSI and Williams percentage R, which is like a different type of oscillator, but it is a price momentum oscillator. That's the same kind of idea. And you can see just off the weekly price chart, you can see how momentum topped out here and just slowly working its way down. But hello, we're now no longer overbought. The public isn't interested. We're coming into those fundamental levels, so now you can start connecting technical trade location, fundamental NVTs not overbought, Philby's curve levels, you know, Benjamin's logarithmic levels. There's one other fundamental I was talking about with you guys. Oh yeah, cost of production. We're back down into cost of production windows. And now we start looking down at price momentum, the actual momentum itself. And we're no longer overbought, so that's good. This little overbought, oversold indicator that I created, Willie, he actually spits out an oversold reading if he ever gets below minus 80. So you'll notice that when I put my mouse here, look at that, we're at minus 77.56. So that's getting really interesting. We're not oversold yet, but we're definitely getting into that interesting area. And then I'm a huge fan of using moving averages, and these happen to be exponential moving averages. And the relationship of the moving averages to themselves as an excellent way to filter out a lot of the short-term noise in the marketplace, and illustrate divergence through the use of slower down tools. I hope that makes sense. You know, that's one of the reasons why I did the modified Williams percentage R, is it's heavily modified just to slow it down. So I use a MACD histogram to show the relationship between moving averages and this idea of divergence. You know, you might get like a short-term spike to high or low, but the moving averages don't pick that up. Sort of filter out the noise, if you will. So it's very encouraging to see that as price is working its way lower, you'll notice that the MACD histogram is not making new lows. And actually what's really important here is we actually want to see the MACD histogram actually make a W here. Right? Boom. So that number right there, minus 373.27, that's a pretty important number. Keep in mind too, this is a weekly price chart. You can see we're sitting right now at 388.32. So we're getting close. If this W does actually confirm, then what it's explicitly telling us is that, hey, you know, price is not as weak as price would lead you to believe. And actually, I think, if I'm not mistaken, you see this up, down, up, failure. That was on this move. So there to there, but you notice that the MACD didn't really go to new highs. I think it did go to new highs, but not hugely. 900, 920, 920. Oh, no, it didn't. Look at that. So actually that is a complete divergence. The divergence itself is actually confirmed right there. So that low there, whatever lowest low here, 749.39, 741. So that low there, 722. Boom. Divergence is confirmed. And of course, price didn't collapse, right? So that event was right here. Price didn't collapse following that, but what was the general direction following that? Sure looks like it was down. So the point of the matter here is, ironically enough, this whole correction has really been a function of this divergence that was told to us. Price isn't nearly as strong as you think it is when we were face ripping up top here. And this divergence is playing itself out. This is what we call divergence playing itself out. This has to play out. The message was put in. The market confirmed the message. Now the message has to play out. And what does that play out look like? It looks often like this. So, as I said just a moment ago, it's quite encouraging that this divergence, this bear div, has finally played itself out. And we may actually start be forming a bullish divergence here in price. Now, it's a quick one, right? So, because it's a quick one, hold on a second. Because it's a quick one, we might often, when we do see this, it does, not often, but it does happen where, you can see here, we made lower lows. But notice on this dump here to lower lows, MACD did not make lower lows. And you notice that on this sort of quick little W, once the initial push up is done, then we have to expect a serious test of the lows. And then this massive divergence confirms on the successful test of the original W. And that actually is what started this massive bull run here. So, like I said, this is encouraging. It's a good sign. And it's the kind of idea like, divergences come in here. Little old ladies are starting to nibble away. There was still one more FU, but you can see that in essence they took that right back and then they went zooming higher. And really what I think, very similar to the way this was in here is that, there's the top way up there. Now we're down here. The ultimate low is here. We're a hell of a lot closer to the low here than we are the high. Yes, this is still going to be a nasty percentage drop. Somebody buys here at 6. They could still lose 50% of their money dumping down to 3. But the point here is that this thing's trying to tell you at this point in the price chart, maybe be careful being too bearish. And in fact, we have a rule on the site, especially if you see a massive divergence like this, that if you are a bear, you can't do anything here until this bullish divergence has played itself out. And in essence, this bullish divergence playing itself out was the rally up into here and then the subsequent failure. So, with all that said, this is encouraging. It's a good sign. And, traders got to trade. We've talked about being at or below reload zones. If we actually start, and the cool thing about this as well, and actually maybe I'll do this on a new chart. Let's, where was that other chart I did? Where did I put it away? Wow, this feels like deja vu. Didn't I just say this? There it is. That's not what I wanted to do. I want to go indicators. MACD, Big Daddy Macamacca. Jump, jump, jump. All right, so we'll go. All right, so there is that potential div. I'd keep it real close. And here over on this, and I think this doesn't update till the end of the day. I'm not quite sure exactly how this index works. But the number there appears to be, let's see what we got here, 460. Yeah, okay, so that's 276. Yeah, 276.81, and the high here 294.41. So we're still not quite there. We'd really like to see a nice little rally here. But what I wanted to mention to you guys, which, I don't really like this trade location. And what I'm worried about is it's going to translate into something like this. But I could see, if this W happens to be the W. And this is probably talking more to traders, maybe a little less to investors. But I could definitely see something like that. Let's see, does that produce a 2 to 1? 2.19 to 1. What a coincidence? Accident? I don't know what you'd say. Right? I don't think that's an accident, right? Maybe even as high as that, right? Just simply buying this W. I think you have to wait for the bullish divergence to confirm. So we want to see a nice little pop here. And then whatever W there is here, you're simply going to play the trade back to the 50% rule. Oh, what a coincidence. Do you see how this stuff lines up after a while? What you're actually going to find after you do this year after year after year after year after year is you're actually going to see a lot of these trades actually set themselves up. And you put all the tools on your chart and you go, oh, gee whiz, what a coincidence. 30 SMA, 50% rule, and it's going to be almost exactly a 2 to 1 off of this bottom. I don't think that's an accident at all. Then I'd also add in two, and maybe let's go back to candles and sort of play around with this a little bit more. We can go there, and I guess actually off of candles the numbers are a little bit more acceptable. Something like that, and then I guess against those lows, I don't know whether we can get up into 50%. That's a tough one. Notice how I said, too, that the 50% level actually lines up nicely with those candle body highs. And my hunch is, right, that I think and let's see if anybody who actually watched the last one that I did. What was the one term that I told you that if you can figure this out, if you can identify this, you make more money than you'll ever need trading for the rest of your life if you can somehow get this concept. There's 52 of you watching this YouTube video. Let's see if anybody can remember what the hell I said. And I tried to make it fun and colorful and verbose. Hey, somebody got it. Excellent, Andre. So, and good, Peter. You got it over here. So 2 people out of, and how many people we got here? Oh, I only got about 8 or 9 people in here. So about 60 people. 2 out of 60. Is that good odds? That's about a little less than 0.5%. No. 10. Anyway, it's not good odds. You're not going down anymore. All right, well, that's good, yeah. Not really. Nanny Nibbles is more just sort of like an investment strategy. I don't know whether, I think you were away, Colleen, when I did this. But if you can get this idea that and really the whole concept of M's and W's is, maybe this was like a bull market. So every time the market got up against the old highs, demand overwhelmed supply, and boosh, up we go. And then same thing here, demand overwhelmed supply. Now, what does a market top look like? Usually looks like an M, right? Doesn't always, but usually it looks very M-ish. And really what it is market was heading up here, and somebody who has pretty deep pockets that put the top in up here said, no, don't go up anymore. You go down, right? And they often actually have to come in and sell into that event to stop the market from going up. And then once we move through here, this level here, then, oh boy, now we have a new trend established, a downtrend, versus previously we had an uptrend working. So I like to call this counter trend rally that stalls against these highs. This guy right here went, no, 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 get your butt out of there. And then if this continues to be a downtrend, every time we get back up into that area, no, 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 get your ass out of there. Right? And in essence, that is what defines a bear market. Lower highs and lower lows. So you can clearly see it here. You know, you can see this high, this high. Notice they put this M in here, market broke down, rallied up into these levels, and somebody went, no, 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 get your butt out of there. Then a dump, rally back, and even on this little rally, somebody went, no, 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 get your butt out of there. Went to new lows, counter trend rally, and really this is what I want you guys to try and see, is notice the candle body highs. Wouldn't that have been a sick-ass trade level? Right there. Same thing here. Market dumps. Candle body highs. This one would have been tough, but man, could you imagine if you had your order right in there? You got filled on that? Jeez. And that, in essence, the guys who are shorting, they're not really there, but definitely this counter trend rally here. You might even argue that we could come all the way right back up into these candle body highs there. And this is still a downtrend, see? Lower highs and lower lows defines a bear market. So I could very easily see a scenario like that. This is really talking to more sort of, you know, what I think, you know, usually MACD moves in like 4s, 8s, 12s, and 16s. So like you can see here, it broke out and it was like 1, 2, 3, 4, and then it had to pull back. And you could go peak 1, 2, 3, 4, back up we go. This one, 1, 2, 3, 4, right? And quite often what you'll see is these things will move in like 4, 8s, 12s, and 16s. I've just found that personally. Like here when we broke, right? 1, 2, 3, 4. So, you know, if we do break out through that level, my hunch is 1, 2, 3, 4 kind of idea. And then, you know, that would be sort of that move back up into a 30 SMA, candle body highs. I don't know whether we can get back up into... Actually, you know what? I might have done that wrong. Ah, okay. That's a little more realistic. All right, so 50% rolls, 38.2. We often talk about 38.2s. Point of the matter here is... if we go off of the entire range, we've got trade locations. Not the best, but it is there. We've got bullish divergence that's trying to come in. And really there's only one other thing that we're missing. If we have location, let's see if any of you guys on YouTube can get this. If we have location, then we get confirmed divergence. What's the one... How many reasons should we have to justify taking a trade? Should they be all the same or should they be unrelated? All right. So, nobody? If you get location, then you get divergence, which we don't have yet. But if we do get divergence, then what's the last thing we're looking for? Oh, nice. Oh, good, everybody. Good. You're getting this. We want structure. So what I find really interesting about this scenario is, like I said, the divergence hasn't confirmed yet. So let's not get too excited. But you never know, maybe by the end of today or next week, right, we get some sort of nice run up against this 13 EMA and the weekly divergence is confirmed. Woo, party! Then we can start thinking about things like counter trend rallies. But we got to frame the risk. So my hunch is this actually goes something like that. That's kind of what I'm thinking. I don't know how big this is here. I think, you know, like I said, we probably need to come back up and then kind of like what we did last winter. And really, we don't really want to see this scenario because really what ended up happening here is that this thing just exhausted itself, right? That's kind of like playing itself out, and then that opened up the window for a dump, what we would ideally like to see here is just a nice healthy W. Right? But that'll be down the road. But at this point, like, let's get that divergence confirmed. Let's start on that confirmed divergence. Let's start hunting W's. And I think this trade sets itself up. But the problem here is we could have this little pop. Everybody gets rah-rah bullish. And then she goes and M's out and then dumps. And that's my worst sort of fear right now. So a lot of people are going to be calling bottoms. But there needs to be one more FU down into this 78.6. So this is what, like, I suppose this could come in. There could be a trade here. Don't be surprised if maybe this fails once or twice. Not really the best setup. Ideal setup for me would be just a wee bit lower. And I kind of like that idea of the FU move. Just to piss everybody off. Let's paint a nice W. Let's get all the kids bullish. Let's, maybe run a couple of the altcoins, get everybody all frothy, and then just one more bang. But we'll see. Only time will tell. If anything, what you don't want to see right now, I'll tell you this, guys. You do not want to see this thing go straight up here like that. Because that means that this still, my hunch is we do something like that on the other side. So, also too, so we talked a little bit. I think I've given you guys the skinny here, right? Moving averages are saying we're still early in this correction. Could get a dead cat bounce, but still early. We are starting to see divergences starting to form. What we'd also really like to see here, I don't know whether we can see it here or not, but we'd really like to see the volatility come out of the market. So like I said earlier, you don't want to see just a straight line move up. That's why you didn't want to see this. That was wrong. We did not want to see that. What we really wanted to see was it come down and just sort of saucer bottom and then go. So you can see volatility is still extremely high. We could get that dead cat bounce that takes us right to 50% roll. But if you're a bull, I don't think you want to see that. I would much rather this thing just quietly go sideways here. Volatility comes out of price. And then we can base. And, of course, this gets Sjord all excited. But you have to tune in to see what we're talking about there on the site's daily videos. And actually, he's on tomorrow, and he said he has a big update for us. So everybody who's a TRI, be sure to tune into Sjord's presentation tomorrow, because I think he's got some candy for us. Okay, so there's your Bitcoin story. Lower time frames, keep in mind TRI site peeps are constantly in the market. I won't go too much into this, but hopefully you can see we have some interesting trend continuation setups working. I think Daniel is just killing this. I think he went 500x long off of this breakout. So way to go, Daniel. You're awesome. And I didn't mention that earlier, but I wanted to give a real big shout out to Daniel and to Joshua. They happen to live in the South Bay, and there was a student that was in the South Bay, and they were like, yeah, we'll be more than happy to help her out. And like I said, I think I did mention this. Turns out she did very well on the exam, so way to go, Team TRI. I love that. In the short term, could I see a rally up into 7,500 area? Sure. Wouldn't surprise me. A, B, C, D. Also, too, if you look at this range, what do you think the odds are? Remember I said earlier candle body closes for trade location. Notice there's a couple really interesting candle body closes there. And then if we go reload zone, gee whiz, there's the reload short. So interesting how we have AB equals CD and reload short 78.6 levels corresponding. So my hunch is probably pretty good odds we're going to jump up into there. Off of a little bit higher time frame. You know, I guess continuing this thought recently, I don't know whether I want it or whether psychologically, maybe it's like wishful thinking, like I want it kind of idea. But I've been thinking for probably, gee whiz, a better part of a month now that we should come up and tag this 38.2. Maybe we'll follow along this cute little trend line here back up to that neckline. Looks like that's what the market kind of wants. Also, too, remember Muox, big old hole in the profile, really should be filled in up here. Once we get to this this level, you know, all these highs are like 78, 7900s. I don't know. I'd be a little bit leery at that point. Like I said, that was the fail level off the lower time frames. All of these levels are basically na. This one, big one, na. Another one, na. Another one, na. Dumped it finally. If anything, if this is a bull, I want to see some sort of na against these lows. But for the time being, here we are coming up into this na level. So let's see how she acts up into here. And like I said, off the lower time frame charts, that's actually a lot of bullish objective levels. So I don't really have a problem with people shooting for... Oh, that's not the one I wanted. Where was the one I was showing you? Was it this one? Maybe. Nope, not that one. But there is that reload zone. What did I do with that? Did I just get rid of it? Maybe I did. There was a different chart. Oh yeah, here it was. So I really don't have a problem with 7,500 area up in there. That seems perfectly realistic. So congrats, Daniel. Nice trade. As I said, I'm feeling under the weather right now, so I'd actually have to get myself all good for the boy here shortly. So not really taking any day or swing trades. And if anything, you know, move stop to trailing levels hit. So anybody who is long off of this, you should be locking in profits. I noticed things like Willie are starting to get stupidly overbought. And look at the divergence developing here on MACD. And I noticed RSI here is overbought, and we're above a Stewart's Bollinger Band. So for heaven's sakes, don't go and buy this here. That just doesn't make any sense. I'll just sort of finish off with a quick view of some of the other names in the altcoin space that are looking really interesting to me. I think I had said earlier it was interesting. Dr. Evil is sort of back on the scene. So making references that Bitcoin will never go to $1 million. I don't know about that. But, you know, if you're a fan of this guy, interesting levels. You can see the double bottom that they just brought the market back down into. He's catching a bid, but it's probably nothing that I'd be interested in. But nonetheless, interesting level. Some interesting price action if you like to play this guy. You know, so be it. You know, Bitcoin short term, if we can accept above these levels, I do actually like a stab up into sort of low to mid 8,000. And I think, as I had said it earlier, what I actually do like is, you know, no. There's the actually, well, we've got this top here. So if this top is broken, then I think that that's a head and shoulders. And interestingly enough, the head and shoulders actually, I think, takes us up into, I mean, if this is the bottom, it is. So be it. But heads and shoulders is take us here to here. And I'm just going to eyeball this. It's not accurate. But in essence, up into there. And more importantly, if we go there to there, yeah. So 61.8. That if we accept above that 7,900 area, then probably a good $1,000 to the upside. And interestingly enough, remember, no. So you can see there's those highs, that high, and the original M top. You can see there's going to be a ton of pressure right up in this area. So if we can accept through this consolidation range, then I think we got a pretty good chance of jumping up 9,000 up to about 9,500 or so. And a lot of cryptocurrencies look almost identical to this. Notice that NEO, right? You can see that same potential head and shoulders bottom. Well, actually not. Well, I guess you could say head and shoulders. Wants to take us back up into here. Couple altcoins that are got my. I mean, there's a bunch of names that look really interesting. Litecoin, you can see that same A, B, C, D. I'm thinking we could easily get a rally back up into here. So if we look at that and go, okay, that's 46.47. Where does that put us on our weekly price chart? And gee whiz, 30 SMA. Well, here we are. So 13 EMA on the Litecoin weekly chart sitting at 52 bucks. So in essence, that little bottom that I was talking about there, 47.48 is that 78.6. So that sort of validates that idea that we could get a bounce back up into this sort of $48 area on Litecoin. And again, you can see A, B, C, D. That makes sense. Ethereum, same thing. We were doing lots of conversations about Ethereum on the site today. In fact, I think this is actually setting up a trade. You've got a great trade location. We're below, at or below reload zones. You've got confirmed divergences. And interesting, one of our site principals, Julian, loves working with RSI. We have a nice downtrend line breakout on RSI, and we've got our first W, which sort of marks the bottom of the slide. And so the way that I would use RSI is if we can get another W here, that becomes a really big buy signal. You can see that we've got a double bottom in price working, and I just threw on this just for curiosity. I just said, if I go and buy that W and I risk against these lows, remember that's what technical analysis is all about, is just identifying these relatively low risk windows. You can take your shots. And I look to take profits. I'm not looking for new highs. I'm just looking for a very natural technical bounce back to the 50% rule. That's better than a 5-to-1 risk reward. Got to tell you, people, this is how all those, those guys, oh, I'm Mr. Millionaire, Billionaire Trader dude. This is the shit that they do, And the irony of it all is, maybe they sell half on this move to here, move your stop to scratch, and then the great part about it is once you're in one of those risk-free trades, you got nothing to lose. Keep the hair on your head. Your stop on the remaining is at scratch, and you might be in the positions. Keep in mind, these are forwards in crypto, all that craziness. I mean, maybe just play the cash market. You might be long this name forever. And if you don't believe me, go back and look at what Ethereum does when it puts in little W's. This was into, gee whiz, what a coincidence, December 2018. Look at this cute little W there, right? And ironically enough, even after all of this mess over the past year, you're still actually now you're just breaking even on this guy. But this W down here, which would have been tough, I'm not going to sugarcoat that. But even if you'd bought this big honking weekly W here, we're just basically back, basically where you bought it. So anyway, really interesting idea there on Ethereum. And this is sort of that. I was very curious as to what this Istanbul thing was going to do, whether it was going to be accepted, whether it was going to be, new bull market. We did in previous weeks talk about how this short setup was politely told to hop at small profit, which is fine. I actually, believe it or not, and there's 30 SMA, like if we get a counter trend rally on Bitcoin back up to its 30 SMA. 30 SMA on ETH right now is $200. So if we go back to our little chart here, where was that? It's over here. Where's $200? 240. Well, $200, if you said to hell with it, I'm taking profits at $200. That's a 3-to-1 risk reward. I mean, the levels are there. It's just a question of, do you put this in your trading plan? Do you trade? This is what we would call an El Tangonator setup, where you get nice bullish divergence confirmed with awesome trade location and a nice W in price. So setups are there. And you can see there's a bunch of them all over the place. This NEO looks really interesting. Again, the sort of that, you can see the fractal bottom here, right? That head and shoulders. Looks really cool. And I think we were watching it over here because this is such a great example. I mean, if you can get good at this, man, you're set for the rest of your life. December, what a coincidence. Market bottoms. Rally into June, July. What a coincidence. Can anybody over 62 people, and actually now I'll officially ask. 60, oh, now 61. Somebody bailed. Oh, now 60. Look at them dropping like flies. Can I get 59? Come on. 58. 57? All right. But, what was I going to say? Oh, actually, I've been blabbing away for a while here. I should shut up. Try and learn this stuff. I mean, please try. You could have gotten yourself a free position, taken your original capital back, maybe gone and bought this and banged out a double off of that, although I don't think it produced it, did it? 650 was the low. They took it up to 13 and change. Yeah, that would have been tough. But I do like the idea of buying this thing there at, what is that? $7-8. Looking for a move back to $16 in sometime into the spring. And the cool part about this is you could have said, okay, I got $1,000 to work with, Brian. I go buy $1,000 worth. I sell half of the position up here. It's worth $2,000. So I got my original $1,000 back in my hands, and I got half of this free position now. Then I take my original $1,000, which has been sitting in my bank account for the past 6-8 months, and now I'm going to go and put that original $1,000 back in the into the market. And of course, I've got my free original trade also working. So this is going to be a really interesting case study just to simply watch how this plays out. Because my hunch is this is going to be one of these, I think we're going through the process of crypto bottoming. So if you are in this space for the next 2, 3, 4, 5 years, I got a sneaky suspicion that we'll look back 2 or 3 years from now, the price will be horrendously higher. And we'll all look at this and go, oh, gee whiz. Well, man, that was a perfect textbook case study on how to get long off of the bottom and then how to recycle your original capital to keep building more and more and more positions with that same original money. So, and as you can see from this screen, there are a hell of a lot of names on here. Man, I absolutely love this one, but I have a feeling they're going to leave me behind here. I love this Geo. This Geo is such a great story, and of course, perfect reload zone. Versus US dollar, this thing I think even looks better, but I just wanted to quickly show that to you. I am trying to buy some more of this thing, but I got a funny feeling they're not going to let me in. But love that. And, somebody even on, fuck it. If you don't like trucks, to hell with it. I don't care. I don't care about that stuff anymore because it's all caveat emptor. If you don't understand the dangers of being on treks, then or you respect or disrespect treks, well then so be it. But there's lots of coins that were taken off of treks that I've put on my own personal wallet. I don't care. So I don't mean to be rude, Colleen, but yeah, if you went through the whole treks nightmare and you're like, man, I don't ever want to do that again, fine, don't buy it. I'm not telling you what to buy. Colleen, am I telling you to buy this? I couldn't give a rat's ass if you buy or don't buy. I don't care. But I am telling you what I'm doing with my money. And I'm in there trying to buy some more. But as you can see, there are W's all over the place. Look at this bat. Right? Is anybody going to beat me up for bat? I love this bat. I think it's the brave new coin, guys. I don't know whether I believe whether this UBIC has really bottomed here yet or not. I actually put a tweet out asking one of the UBIC principals just to tell us if they're working or not and didn't get a single response. So to me, that's got to be a warning sign that I don't know what's going on with UBIC. And probably best to let these damn things W out first. Sis, storage. There's that Ethereum. You can see she's just going for it. And the cool part about Ethereum trade right there is it hadn't confirmed yet. I think I even put a tweet out and said, if these things W's come in, then you got yourself a trade. So, I mean, it's just sitting there, right? There's a bunch of them. This one, I'm super bullish. Got a whack of it. Bought a bunch last cycle. Free position. So, really, I don't need to add anymore. It was super, super popular there back in the winter time. Well, I guess it still is the winter, isn't it? Well, I mean, I guess it was back in the fall. Everybody was getting all excited about this. But is anybody talking about RLC now? Yeah, so Fred, yeah, you mentioned that, right? I mean, everybody was all just insanely bullish about this thing a month or two ago. Well, the irony of it all is only now coming back down into the original W's. So, keep your eyes peeled. They're everywhere. And, I don't know whether you've heard of Shane Meow. I don't know what we call his. I think he goes by the name Shane Johnson. But anyway. He's super fan of things like Doge, right? I wouldn't be surprised if Doge does pretty well. What else is there about Shane I was saying? Anyway, the point of the matter here is, Pluto Saturn cross, dun dun dun, supposed to be in January. So now we can even say we have celestial events all lining this stuff up. So the irony of it all is, I actually think that Bitcoin price, and really all of these markets, they could, excuse my French, F around with them. But on balance, I'm feeling like we're a lot closer to bottoms than tops. But at the same time, too, trade your setups, right? And ironically enough, the one market that's actually putting in a half-decent little setup for me right at the moment happens to be one of the more popular ones. So go figure. But this is a setup. It's nothing more. You have no idea whether this thing's going to break down and move to new lows. It could. So if you're going to trade this kind of stuff, then identify where you got to get in, identify where you're going to get out, where you're going to take profits, make damn sure you have appropriate risk management tools in place, and really follow and vet and journal everything, how you're feeling and seeing in the trade, because I can absolutely guarantee you your emotions are actually going to try and get you out of pretty good trades. So Daniel wants us to pump it so that we can go in and short it. Spoken like a good trader. All right, I think I'm going to leave it at that for today. I hope you guys got some good value out of what I said. I mean, give good shout-outs to some people that I highly respect on the net. And as I've sort of said, there is a lot of sort of smatterings that we're getting close to this crypto bottom. I don't know whether we're there just yet. I do see lots of trades, and the great part about it is trading community here at TRI. We're zipping in and out. I was long a couple times through the past week just trading setups on an intraday basis. So we're definitely active, and of course I'm super active in the stock market. But as for crypto, I think the general message is, look, you guys have put up 2 years of shit here. Don't give up now. Just go slowly. You've actually gone through the worst part of this entire experience. Don't go and bail now and say that it's all crap and it's all garbage. Don't go and bet the farm now, because we're not there to say this is a bull. Remember those 13 period, 30 period moving average relationships. But just slowly put yourself in a position so that, 2020, 2021, 2022, 2023, 2024, into that insane blow-off euphoric top that just seems to happen in this space about once every 4 or 5 years. You're in a position to be taking profits, to be banging out doubles, to be seeing your account balance go up appreciably. Don't come then and buy, because that's what everybody did in 2017. Okay, everybody, I think I'll leave it at that. Sure hope you guys got some good value out of the broadcast today. Have yourselves a great day. Of course, if you have any questions, feel free to give me a holler. And as well, too, general message, please, if you like the video, please hit the like button, subscribe button. And, of course, everybody has to remember to ring Colleen's bell before the end of today. Is she still here? Yes, she is. Ding, 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 ding. But just don't tell her husband, okay? All right. Because you're awesome. There was specifically a day when we had that joke and you were here and you were commenting, and that's why we made reference. And it's all a lighthearted. Mr. Colleen, if you're insulted, please accept my apologies. All right. Have a great day, everybody. All the best. Hope to see you on the site, or at the very least on the YouTube pages. But like I said, getting ready for a huge new update from Sjord tomorrow. So actually, I might be doing a lot more videos off of this page too. All right. Take it easy. All the best. And bye for now.